Hey, if you're looking to repair your personal credit or just want to learn more about your personal credit, I'm glad that you're here. You're at the right place at the right time. And so, got a lot to get into today. Today, we're going to talk about the Equifax data breach 2 years later. It's actually been 2 years since that Equifax data breach. Feels like it was yesterday. And we're going to talk about Experian Boost. Is it really worth it? We'll get into that a little bit later. So, I'm Joe Chavarria, and very excited to have you on another episode of the Cup of Joe show. So again, a lot to get into today. And before we get into the content, I just want to remind my listeners that if you're hitting roadblocks, you're with your credit, and you feel like you're not really getting anywhere, you're hitting a plateau, or just not really sure to where to begin. I feel you. I've been there personally. Many of our most successful clients are this. We're in the same boat as well. And so I encourage you to let my team take a closer look at your credit report for free. And so for a limited time, my team of credit analysts who are awesome here at our office, I personally trained them all, and they love what we do here. They're awesome at breaking down our clients' credit reports, specifically going through them and customizing our programs to fit the goals of our clients, whether it is you're looking to buy a house within 3 to 6 months. Maybe you are paying too much interest on your auto loan. You like to refinance or maybe get a different vehicle. Maybe just lower your cost of living overall by having better credit, because that's another benefit of having stronger credit. So if you are in that boat and just struggling or not sure to where to begin, let us take over to schedule a free, no obligation credit evaluation. Go to thecreditagents.com. That's www.thecreditagents.com and schedule your free call to get a complimentary credit report evaluation. Again, that's thecreditagents.com, or give us a call, 800-786-2120, and one of my team members here will be more than happy to take great care of you. Okay, so let's get into the Equifax data breach 2 years later. And so just for those that are chiming in or listening here and not too sure what I'm talking about, what the Equifax data breach actually was or is, this is basically where 150 million Americans, they had their data compromised. Basically, it was stolen by a perpetrator who just hacked into Equifax's data system, and 150 million Americans were impacted by this. This happened actually in September 2017, so this was in fact 2 years ago. And Equifax ended up settling for $700 million. And so that settlement has been finalized. The final number was $700 million. And Emma Hurt from WABE, which is a news station, I believe, in Minnesota, she wrote an article or Georgia rather, wrote an article for some people that, was mentioning that the cash relief that some people received from the settlement, which is not a lot, but there was, anyone who was impacted that got involved in the class action lawsuit, she claims that some people received from the settlement isn't enough. And in fact, Robin K, I can't pronounce her last name, but she's just a consumer that's out there. She received a call from her bank that someone was using her credit card or trying to hack into her details. The bank caught it. The bank stopped it. But I understand, that it's a nightmare having to deal with all that. It's just a hassle. And so that's, an example of someone who was, impacted or, is claiming that the settlement is just not enough to deal with everything that's going on as a result of the data breach. And what's interesting is that Equifax was actually warned, they were warned by the federal government about a software vulnerability months before the attack, but the company did nothing about it. And the settlement, the victims that were, of the 150 million people that are impacted, let's just call them the victims. Victims were offered $125 cash or 4 years of free credit monitoring. Now, when this first offer came out, or when it was first presented, the FTC, which is the Federal Trade Commission, urged the victims to take the 4 years of credit monitoring. So they were pushing consumers to go in that direction as opposed to the cash settlement just due to the overwhelming response for cash, and the reimbursement fund was only at $31 million at that time. At the end, the settlement ended up reaching $700 million, but at that time, it was only at $31 million. And so the FTC urged, that's the reason why they urged the consumers to take 4 years of credit monitoring instead. Now, due to the breach, people are learning that they are not the customer. Like, you are not Equifax's customer. I am not Equifax's customer. We're not Equifax's customer. We're essentially their product. Okay. So, and what I mean by that is Equifax makes their money, and not just Equifax, but Experian, TransUnion, as well as other credit reporting agencies that you're not familiar of, because the big three pretty much make up the majority of the market, or the most talked about publicly traded companies. But we are their product. Our data is their product, and our data is sold from anyone who wants to purchase your information, or purchase your data to maybe offer you a credit card. If you ever get those pre-screened offers in the mail, from Capital One or from Credit One or whoever, those pre-screened offers, you're just not randomly selected to receive a credit card offered. Your data is actually purchased by Discover, Capital One, Chase, Equifax, Experian. Well, it purchased from them to be able to solicit to you credit card offers or loan offers, things like that. And so that information is valuable to credit card companies, to lenders. They need to know who they need to be marketing their products or services to. So we are the product of Equifax, Experian, or TransUnion, in this case here, mostly Equifax. And so we just wanted to get that straight, that we're not the customer, we are the product. Now, when the data breach occurred, Equifax's stock had plummeted at the time of the breach. Of course, that's typical with most investors. They kind of panic when something like this goes down. But now the stock is back to where it was. And so these are some facts that just over the past 2 years were able to accumulate. And I want to talk about what does all this mean? How do we interpret this information? What does it really mean? So again, the credit bureaus make their money by selling your information to banks and lenders. So you are the product, you are the commodity, you're not the customer. And now, while I don't agree with this model, but this is their business, and information is a very hot commodity. In fact, if you remember the original Wall Street movie, the late 80s Wall Street movie, Gordon Gekko from the movie said it best. He said that the most valuable commodity is information. And, unfortunately, while the data breach happened, I don't like the fact that it happened. Equifax does need to do a better job, and companies alike that have data got to do a better job of protecting that data. But unfortunately, Equifax and maybe some other credit reporting agencies just flat out don't care, about the data being compromised, because at the end of the day, people are still going to be buying it. If the data is compromised, in my opinion, I don't think that's really going to stop Discover or Chase or whoever from buying the data. The data is still there. If the data is compromised, meaning someone else just got a hold of it and they're just probably selling information on the black market, I don't think that's really going to slow down Capital One or Credit One Bank from wanting to purchase data to offer credit cards to. I just don't see that happening. And so, in my opinion, if there's not going to be a slowdown in purchasing data, it's evident that it's not a big issue, because Equifax's stock price is back up to where it was. So obviously, there's not a big revenue problem. There's not a real big issue. They paid a $700 million fine or settlement, which sure, that stings. It's a lot of money, but these guys make a ton, make billions of dollars annually, tens of billions of dollars annually. And so, while information is still king, it's still a hot commodity, I just don't see them, making like a huge ordeal. Hey, we need to protect this data. It's not like they lost the data. And I think that'd be a bigger issue. if the data was like deleted or stolen and they had no access to it, then that'd be a bigger problem because they wouldn't have data to sell to Capital One, Discover, whoever, right? Then that'd be a problem. That would really hurt their bottom line. That would really hurt their profitability. It was just, someone got access to it or some entity got access to it and just got a hold of it. It was just compromised, but it wasn't lost. It wasn't stolen. And so while your commodity, someone else just took a picture of it or took a look at the commodity, which is the information, it wasn't actually lost. It wasn't really stolen. So, that's why Equifax's stock is back up, in my opinion. And so it's unfortunate that they don't really care about, selling wrong or right data or protecting the data. They just sell data. That's one of the revenue streams for Equifax is, selling consumer data to whoever would buy it. But of course, they make money on credit monitoring. They make money on selling credit reports. They make money on even the dispute process. They find a way to profit from that. They make a lot of money in many different areas. Data does, in my opinion, I believe, make up a lion's share of their revenue stream is in the selling of information. But that's where they make their money. And so, the kind of going back to the settlement offer, $125, cash or credit monitoring. I don't think that $125 cash is going to do a lot. I mean, if you looked at the example earlier where that consumer Robin K, I'm assuming she took the cash offer. In fact, I believe she did because she already had credit monitoring. But then having to deal with all those phone calls afterwards, the bank, contacting her that, hey, someone may be trying to access your information. And, good on the bank stopped it. In fact, many banks, most credit card companies have advanced over the last couple of years to be able to spot fraudulent activity or weird consumer behavior or buying patterns, and they're able to kind of stop that in its tracks. But I don't think 125 is worth I just don't think it's worth it. I agree, definitely, more than that. What is your time really worth having to deal with all of these headaches? But, what would be more valuable if you don't have credit monitoring established, that in my opinion, the cash is not really going to help you as much as 4 years of credit monitoring would. Granted, it is through Equifax, it is through them, but nonetheless, it is still credit monitoring. Credit monitoring is going to allow you to know if someone checked your credit. They'll notify you if there's an address change, which could indicate maybe there's a possible identity theft going on, because an identity thief will use your information and have credit cards sent to their address. So you'll be notified of a new address change, new inquiries that occur. You'll be able to just take better control of your credit and catch possible identity theft in its tracks and put a stop to it right then and there. And, another, just from a monetary perspective, why I think 4 years of credit monitoring is better is just the value itself. It's $125, cash, whereas 4 years of credit monitoring, on average, credit monitoring is about $20. Typically, I would say that is the street value or the market value of credit monitoring. What is credit monitoring really worth? Most credit monitoring companies charge between $10 to $30 a month, depending on the website and the service that's being offered. So it's just, the minimum, say 20 times 4 years. That's about $1,000, about $960, a little less than $1,000, not counting tax. But from a pure, monetary perspective, value perspective, the credit monitoring is worth more. So if you don't have credit monitoring and you were a victim, your information was compromised, I would venture to say that would be your smarter way to go, is to get the credit monitoring, because you do need to monitor your credit. If you're not doing that, and 125 cash, would maybe cover a couple months of credit monitoring, where you can just get 4 years of it at free, which the value is actually more. Okay, so if one thing that I want to also highlight based on this article that was written was, which I did touch on it just a while ago, is that the bank, Robin's bank, had stopped the perpetrator in their tracks, and they weren't able to open up credit cards in Robin's name or do any kind of fraudulent charges. And that's good. In fact, a lot of us are concerned about data, our data, protecting the data to a certain degree. We give up a lot of our privacy, through social media platforms, and we share a lot. So we give up a lot of our privacy rights. And so I think a lot of us have kind of got past, and starting to believe that, our personal data is not really that protected, that private. But there are stop measures to avoid, your information being taken advantage of and going down the wrong path of fraudulent activity, fraudulent credit cards, or identity theft, stuff like that. And what I like about the banks, which is really true today, is that, again, a lot of credit card companies today, a lot of banks today, they catch that stuff. And I would assume because Visa, MasterCard, those companies have put a lot of pressure on the banks saying, hey, look, we're taking a bath on these charges, or people claiming fraudulent charges. We need to put a stop to this. We need to kind of prevent it from getting this far. And the best way to do that, and what a lot of banks have already incorporated is, if they kind of notice behavior, notice transactions that are really in a different state or a different country, or not your typical purchases, then they'll notify you. They'll stop the card. They'll kind of put a hold on or freeze on the card, which prevent further charges from occurring. They'll notify you, usually by text or automated call, and say, hey, is this you? And you just reply yes or no. And if it's yes, then just kind of they'll release the card, and it's unfrozen. You can use it again. But if it's not you, they'll keep it frozen. They'll lock it up, and then that'll stop the thief in its tracks. And so a lot of banks, a lot of credit card companies have been doing this. Not for a long time, but fairly recently. And so, if you're concerned about someone taking advantage of your credit card or debit card, which is a valid concern, I share that with you. But just kind of finding a little peace of mind there that a lot of banks have some stop measures of that. If you're not sure if yours does, you probably want to give them a call. And I bet you they probably do. They just need to do something to maybe activate or implement. A lot of them are already implemented automatically, but if your bank, your credit union does not, or you're not sure, you may want to give them a call and find out what you can do to kind of catch, fraudulent charges in its tracks. So I want to give you some helpful tips if you believe you're a victim of identity theft and you want to protect yourself, or if you do find yourself in the middle of an identity theft scenario, someone stealing your information, what to do about that. And so the first thing is, to get a credit monitoring service. You need to know if your identity is being compromised, your information is being used. And so the best way to do that is to get a credit monitoring service that monitors all three bureaus and provides you with alerts. Credit Karma is okay. It's a free one, but it only provides you with Equifax TransUnion alerts. There's no Experian in the picture. So you probably want to get a paid one that provides you with all three and with the same alerting capabilities, which most of them do, and provides you with all three reports and scores from all three bureaus. And also, many of them do also provide a insurance policy, like an identity theft insurance policy, like your information is compromised and is stolen and you're subscribed to the credit monitoring provider. Then they'll cut you a check for the estimated cost. Usually it's up to $1 million policy to help pay for the damages that may occur from the identity theft case. So a lot of that's embedded in credit monitoring services. And so first and foremost, get a good credit monitoring provider. And if you hang on for a little bit, I'll recommend one too. If you don't have one, I don't know where to go. Number two, you need to freeze your credit file with each credit reporting agency. In fact, if you don't plan on applying for any kind of credit anytime in the future, or don't really apply for a lot of credit generally, and just want to make sure that if someone has access to your information, that there's no way that they can apply for credit, you kind of stop them in their tracks. And the best thing to do is to freeze your credit file with each credit reporting agency. Many of them you can do online. You go to Equifax.com, Experian.com, TransUnion.com, and you can do the freeze online, or you can call them using the automated system. Equifax phone number is 800-685-1111. That's to do the freeze via automated phone system. Experian's phone number is 888-397-3742. TransUnion is 888-909-8872 if you want to freeze your credit file via phone using their automated system. Once you do the freeze, you're going to be given a PIN number. So you don't want to lose that PIN number. You need to remember that PIN number. So maybe set it to the PIN number that you frequently use, or you're going to remember, or write it down somewhere, or secure where you know where it's at if you need to retrieve it. That PIN number is what you're going to need to unfreeze your credit file when you go and apply for a line of credit or a loan. And so, let's say you're applying for a mortgage and the mortgage lender tries to run your credit. They're not going to be able to because of the freeze. And so you'd have to contact each individual credit reporting agency and unfreeze, or go online and unfreeze your credit file. And then that way that mortgage lender or that credit card company can access your credit file and base their approval on your credit information. Third thing to do is also, one thing that we didn't talk about too much, we kind of touched on a little bit, are the other credit reporting agencies and the smaller guys. And they're not so small. They're actually, multi-million dollar, revenue-based companies. They just are not in the public eye. They're not as talked about as much as the big three. And I would recommend also freezing your credit file with these credit reporting agencies: LexisNexis, Novice, SageStream, ARS, Clarity Services, which is owned by Experian, and Credco CoreLogic. You can actually freeze those online, by fax, or mail. In fact, what's interesting is that a lot of credit reporting agencies, or the major ones, Experian, Equifax, and TransUnion, retrieve information from these smaller or hidden credit reporting agencies, LexisNexis, and Novice, SageStream. In fact, a lot of credit card companies also use these alternative credit reporting agencies to base their approvals as well. So not a lot of people know about these alternative credit bureaus, but it's a good spot to also go freeze your credit file with them, because it's another center, another source where Equifax, Experian, TransUnion collect data from, and some credit card companies use these other alternative services to also determine approvals. And I do have another episode where I do talk about these a little bit more, so you may want to check that out. And if you do suspect you're a victim of identity theft, let's say that this is afterwards, this has already happened, then you first and foremost need to file a police report. And you don't need to call 911. I mean, you could, but you don't have to do that. You can just do a Google search to find the phone number to your local police department, your local sheriff's department, and contact your local police department. And then they'll usually send somebody. I'll just tell them, hey, look, I'm a victim of identity theft. I have a copy of my report. There's accounts out of my report that do not belong to me. I'd like to go ahead and file a police report. Usually they'll send somebody out to your home or wherever you're at, or they may tell you to come in. They may send a constable or a sheriff, and then you just complete the police report. I mean, it is a serious crime. It's identity theft. It is theft. It is a serious crime, so they will take it serious. And then once you have the police report, then you want to obviously get a copy of it. They'll usually give you a copy of the case number, so keep that somewhere safe and secure, because you're going to need it. And then you're going to want to complete and sign and notarize the FTC ID theft affidavit. In fact, what we'll probably do is we'll probably put a link somewhere in here to where you can download a PDF copy of the ID theft affidavit. You just need to complete that. You'll put in there what accounts are not yours as a result of ID theft. You have to get a notary to notarize it, so that way it is a statement of fact, or someone who can witness to that this was you, in fact, you signing this. And then what you're going to want to do is, maybe make a one-page letter to Equifax or to Experian or TransUnion, wherever the accounts are. If it's all three, then it's all three. Send an individual letter for all three, and send a simple letter. Hey, dear Equifax, these accounts do not belong to me. I was a victim of identity theft. See attached for a copy of the police report, the notarized affidavit, and please remove these accounts from my report. Please delete these accounts from my credit report immediately, and then send me an updated credit report, showing me that you did that. And that should take care of it. If it doesn't take care of it, you may need to follow up one more time for whatever accounts were not removed. And if it's still not taken care of, then you probably want to get an attorney, or contact us, and we may know an attorney we can recommend, and probably have to get their attention that way. So Again, we'll probably put the link somewhere somewhere around here where you can download that affidavit, and in case you can't find it or need to get that, we'll put that somewhere in there. All right, cool. So the next thing I want to talk about is Experian Boost. Got a lot to talk about on this. Is it really worth it? Experian's actually requiring that you give up your checking account information for them to do their thing. We'll talk about that, pros and cons around that. But first, I like to thank our partners at IdentityIQ.com. And so if you are currently monitoring your credit through Credit Karma, or even if you're not monitoring your credit, you are missing out big time. So Identity IQ is going to provide you with a full, detailed consumer report from all 3 credit bureaus, not just 2 like Credit Karma. And they're still going to provide you with your Vantage credit scores, which is the same score model that Credit Karma uses. And in this case, you get all 3 reports and scores. And also IDIQ provides you with that $1 million identity theft protection policy that I mentioned before. They provide dark web and internet monitoring as well as an enhanced 3-bureau credit report monthly. So you get an updated credit report from all 3 bureaus once per month. The service is great. I use it for myself. It's a great tool to use if you're starting to repair your credit, because it's going to give you much more data that you need as opposed to what you would get from Credit Karma. And for a limited time, my listeners do get 35% off their Secured Max monthly plan. And you get a 7-day trial for just $1. So to take advantage of this offer, go to scores.com. That's ALL, the number 3, scores.com to get started on the monitoring and begin protecting your credit right away. Again, the website is all3scores.com. That's ALL, the number 3, scores.com to get that $1 7-day trial and 35% off the monthly price. It's actually $20 monthly plus tax to take advantage of that. All right, so now I want to talk about Experian Boost. Is it worth it? What is it? So we'll get into that here now. And so basically Experian Boost, they allow, through this new program that Experian owns, Experian Boost will allow consumers the ability to add utility payments to their Experian report. Only positive payments will get added, which is good. Of course, you don't want negative information, but add positive information to Experian credit report only. Now, the score model that this would even influence, I said that kind of weird, influence, would be Vantage and FICO 8 or 9, the newer versions of FICO. Those are the only score models right now that are influenced by this alternative data. And the way that this data gets on your credit report is Experian's going to access your checking and savings account data through a third-party company called Venicity. And Venicity will access, what they do is they access consumer bank records once per month to retrieve the data. They do it in a read-only view, and they collect the data on a once per month basis, send it to Experian, and Experian will add the payment history. Now, they're adding utility payment history, so this means light bill, cell phone bill, water bill, gas bill. They're looking for utility type accounts, and they're going back up to 24 months of payment history. You do need to have at least 3 months minimum to be available for the account to be added, but they'll go back as far as 24 months of history. And if the utility account, here's what's interesting. If, let's say you do this and you start missing payments on your cell phone, your water bill, your gas bill, which is rare. Typically, those are the things that are first to get paid. You need your electricity, you need your gas, you need your water, you need your cell phone. Those are things that are first to get paid, typically before credit cards, before rent. And so, if you catch yourself in a bind, you catch yourself in a pickle, you lost your job or something really severe is going on, you can't pay, and it goes delinquent. The account will stop reporting. So if you go 30 days, 60 days delinquent, the service is about to get shut off. One, Equifax is not going to report that. And then 2, they'll just go ahead and stop the reporting, altogether. And so it's interesting because, if I'm a lender and I'm kind of using this alternative data to determine can someone pay the bills on time, can pay me on time, it's a little tricky because, I'm not going to get the full and complete data on this payment history because if they stop paying, it's just no longer going to be there. So it can be kind of misleading to a lender, to a bank. I think from a consumer, that's kind of, I guess that's kind of cool for a consumer. Just like, hey, if something bad happens, then they're not going to report it. And so basically only good stuff reports. So it's kind of interesting there. So some interesting data points is that 65% of lenders are looking at alternative data in the decision-making process. This is an article that Experian actually wrote and got this data. And what's interesting about that data point is that the lenders, the alternative data that they're looking at is actually, income verification, employment history, job history, whatever. Well, sure, they're looking at other stuff besides credit, but they're looking at things that we kind of already know about, like job history, income, stuff like that. So that's not really alternative data. It's just all their other stuff that's considered in the application. I guess you can call it alternative data, but I don't like how that term was thrown out in this article because it's almost like, hey, lenders are looking at this as well. And lenders are looking at your utility accounts as well, which is partly true, but not entirely. 65. So another thing is 64% of consumers, they did see a credit score increase with Experian Boost. So not everybody, but about 2/3 of the people that did Experian Boost did see a score increase. 20% of those consumers saw a 10-point increase, and the average score increase is about 13 points. So what does all this mean? How do we interpret all of this information? So, alternative data has always been around. For example, LexisNexis can provide broken leases, tax liens, judgments, bankruptcies, deed information, even accident and ticket information. Typically, insurance companies get data from LexisNexis they get the LexisNexis Clue report for the accident history, the ticket history. So it's good for insurance companies. So alternative data has kind of been around. So for them trying to get the utility accounts on Experian, kudos for them for doing that and getting the alternative data into the picture where the three main credit reporting agencies are predominantly used for credit seeking opportunities. But it's not like this data didn't exist. It's not like your rental history was never able to get on your credit report or didn't exist or wasn't reported anywhere. You just didn't know about it. You just didn't see it because it's not on the three main credit reporting agencies, but it's out there. It's accounted for. It's existed. It's just being collected by these alternative data centers like LexisNexis, Innovis, SageStream, et cetera. Check Systems is another example of an alternative data or a credit reporting agency. What Check System does is they collect bad checks, overdrawn bank accounts, and banks use Check Systems to determine if someone can open up a checking account. So again, alternative data has been around. They exist. So it's not nothing really new, but Experian just found a way to get some alternative data to report and also make it scoreable, which is unique because VantageScore is a score that is owned by Equifax, TransUnion, Experian, and FICO is the other competitor or the predominant player in the credit scoring space. And that score, your FICO score, your VantageScore, is coming from information that's found on your three major credit reporting agencies or three major credit reports. And so by getting the alternative data into one of the major credit reporting agencies, it allows the VantageScore to be influenced by it and the newer version of FICO to be influenced by it as well. But, just so you understand who's really using this score model, not very many lenders are using the VantageScore model or the newer version of FICO. In fact, most mortgage companies, most credit card companies, most auto lenders are using classic versions of FICO. Like in the mortgage industry, they're using Experian 2.0, 4.0 for TransUnion, 5.0 for Equifax. So a little older versions. Again, the alternative data does not influence those older score versions, only FICO 8 or 9, okay, and newer, that it's going to actually make a difference. And so it doesn't make a difference. So if you do the Experian Boost because, hey, let's say that you're like, you apply for a mortgage loan and the mortgage lender says, hey, you are 10 points away or 5 points away from being able to qualify. And you say, hey, well, what if I did that Experian Boost thing? I heard people get a couple points from that. your mortgage lender is probably like, yeah, give it a shot, right? Because what do they know? A lot of them don't know a lot about credit. And that's not a jab, at the mortgage, industry. It's just that, a lot of them are great at what they do, which is mortgages, but, don't really know a whole lot about credit. Some do, but the majority don't know a lot about credit. Just like me, I know a lot about credit, but I may not know a lot about mortgages, so I'm not going to pretend that I do. But, what could happen is a mortgage lender could say, yeah, give it a shot. It may work. But again, it's only going to influence the newer versions of FICO. So you go do that, you give up your bank account information, you give away that privacy to Experian, and then you go and apply for a mortgage, and you're like, hey, my score didn't really move. What happened? And it's just because, for one, and it's not guaranteed that everyone's going to see a score increase, but 64% did. Some, that means about 36 did not. But again, the mortgage companies are not using those versions of FICO. They're using the older versions of FICO, which does not consider this alternative data in the score anyway. So that's why it doesn't make sense to do it if you are trying to get a couple extra points to get a mortgage, get a better interest rate in a car loan, maybe get approved for a credit card. It's not going to make a difference there because this only applies towards your Vantage credit score or your newer version of FICO. The other thing I don't like about it is that, you have to give up information regarding, related to your checking and savings account. And what I don't like about that is, one, just giving someone access to that information, to get a utility account. I feel like they're going about it the wrong way. If they wanted my utility account, they could probably get it somewhere else. But I'm sure Experian would have to pay for that. And so what they're doing is they're giving away this information for free. They're giving away this data. Hey, we'll put this information on the credit report, for free, because it doesn't cost the consumer anything. So instead of Experian going somewhere else and buying this data, which they're used to doing, this is a way for them to save money. They're thinking is like, let's get the consumer to just give up their information, which we know that they will, and obviously they did. Many of them did. We don't need to pay anybody anything. We just reward them with the account being reported to the credit report. We reward them with the score increase, right? And then you, the consumer, you're just rewarded by that. But honestly, your data is much more valuable. It's hundreds, if not thousands of dollars that your data is actually worth. So if I'm the consumer, which I have not done Experian Boost, particularly for this reason, is just I'm going to just give away my information, for free, possibly a 5-point increase, 10-point increase. It doesn't really matter. If you want this information, you're going to need to buy it, just like you pay other companies for data, just like you buy other data, you buy other credit bureaus. Well, guess what? My information, you want access to this, I consider myself, hey, a credit reporting agency myself. I have data on myself, and so if you want it, buy it. Okay, make me an offer and buy it. I'm not a cheap date to where, just by getting a credit, reporting trade line from my cell phone bill on my report, that's not enough to entice me to do something. That's my opinion on that. If I'm going to do Experian Boost, then, they make me an offer, sizable offer, to give up my checking account information and allow them to retrieve data from my checking account to get reported onto my credit report. I think that is their agenda. I think that what they're trying to do is they're trying to get access to this information to create more alternative data, with keeping their costs down, right? Not really collecting, not buying this data. They're just going directly to the consumer and letting the consumer have an influence on this. So they have a lot of like, best way to put it, they have a lot of favors on the consumer side. Like you as a consumer, you can control the data. Bad information does not get reported. It's free. Like it's a lot of incentive for a consumer to do that because they want to get the consumer to give up this information without a fight. Make it really easy. Why is that? Does Experian just really just want to get your trade line to report to your credit report? Are they really wanting to get your cell phone bill, utility, your gas bill on your credit? Is that really what they want, or do they want something else? Based on their history, I would say they want something else. They just want more data, and they want to get it for free, and you're giving it to them for free. So that's where I have an issue with that. And don't think that Experian is just going to stop there. Once they have access to this information, don't think that they're just going to just create Experian Boost product based on this, they're going to get a lot more data from you besides just this. They're going to get a lot more behavior patterns, a lot more data, probably like score models based around that. And again, you just gave it to them for free, where they're a company that has issues with data compliance, data integrity, and you're just giving them more data. So it's just like we're just feeding the beast. So if you have not done Experian Boost and you're kind of on the sideline wondering if you should do this, don't take my advice, make your own opinion. But my opinion is I would recommend you stay away from it. It's too early. They just is brand new. I don't agree with giving up this information so easily. I don't agree with, give it to them for free. My advice would be kind of stay on the sideline, watch what happens with this, give it about 6 to 18 months before you really consider it. So you can kind of get some more opinions, some more insight as to what is really going on with Experian Boost. Now, if you're doing this because you want to improve your credit score, okay, there are other ways to do this that are better for you, more beneficial for you, and will actually apply to the score models that really matter. And so what I would recommend doing if you're in the process of buying a house, or you're going to be 3 to 6 months out, you want to buy a house, or you want to refinance your auto loan, or you want to buy a new car, whatever, this is the steps I would recommend you take. Number one, get your credit report. Okay, go through your report, figure out what's all on there, what shouldn't be on there, what's incorrect, what's inaccurate, and get that information removed from your credit report. Do your best to remove collections, late pays, charge-offs, bad addresses, bad names that don't belong to you, employers, phone numbers. Do your best to remove as much negative data from your report as possible, because that does have a positive influence on your credit profile, your credit report, and many times it'll even influence your credit score positively as well. As you're doing that, you're going to need to build some positive credit history moving forward. So if you have no credit whatsoever, get yourself a secured credit card. There's some online companies that do no credit check. They'll give you a line of credit on their website. They report payments to your credit report. In fact, we'll even put a link to a website we recommend where you can get access to secured cards, some online stores that provide you with credit as well. We'll put the link in the description somewhere where you get access to that and get access to some credit builders. And once you're repairing your credit, removing accounts, building positive history, you want to maintain it. Keep your balances low. Don't max out credit cards. Make sure you pay things on time. Those are things that you can do to further maximize your credit outside of having to do Experian Boost and giving them much more information that they can get on their own. They're just refusing to pay for it. They're finding an easier way, getting the consumer to participate. And just keep that in mind, that Experian pays lots of money for data to buy. They spend millions of dollars to buy smaller credit bureaus, which are large data centers. And so you have a value. Your credit profile has a value to Experian because, remember, you're the product. So the product's not worth zero. It's worth something because they sell it. So there's something valuable there. So if you're going to give them the information, don't settle for just credit reporting account on your report. I would not give it out, my information to Experian without a monetary compensation attached to it. So we'll leave it there. That is my time for today. Subscribe to get alerts on other upcoming episodes. We do a couple of these a week. And don't forget to submit your information if you want to get a credit review by my team. We're happy to do that for you. We'll leave it there. I'm Joe Chavarria, and I'll see you on the next one. Take care.